Well, once again, welcome. In today's lesson, we are going to look at how to set up inventory control sheet to enable us to track our stock balances as and when we buy and sell in our business. This particular video is only considering a situation where we have only one unit of measure in terms of our stock entries. We shall also look at another situation where we are likely to encounter multi-unit of measure. For example, in a beverage, in a business that sells beverage, can decide to sell in crates as well as in bottles. So in this situation, you are likely to encounter a case where you buy in crates, then you sell in bottles. So that particular situation is a different concept altogether. But this time, our assumption is that we buy in the same unit of measure as we sell. So that is the concept we are going to use to set up this inventory control sheet. We are adding the inventory control sheet to the existing workbook that contains the receipt and the payment side of our cash book, our purchases, our sales, together with the suppliers and the customers. So I'll add a new worksheet wherein I'll set up my inventory control account. So I add a new worksheet, and this worksheet is going to be labeled as inventory. So I label the worksheet as inventory. Now, the inventory sheet is designed in similar way as our suppliers and our customers were designed. But this one has a slight difference, which we shall observe as we go ahead. We notice that in the suppliers control account, we have a column where names of all our suppliers are recorded. When you go to the inventory control account, we shall need a column where the inventory items shall be recorded. In the suppliers control, there is a column where we have opening balances. We shall similarly have a column for recording our opening balances for inventory. But the only difference here is that as far as the inventory is concerned, we shall consider in terms of their quantity, their unit cost, and the total value for the item. So for the opening balance, we shall have the opening balance in terms of quantity as well as in terms of value. Then we will also require a column where purchases of the various items will be recorded. Then another column will also take into records sales of the item. Then finally, we also set up the closing balances. The closing balances also, just like the opening balances, we shall have the quantity and the volume. So the inventory control is going to have this structure. So we shall have in column A heading called description. You can also decide to label it as item. So below the description, we will list all items or all inventory items that we have in our system. Right. Then for the opening balances, because we need the quantity and the value, where the value will be obtained by multiplying the quantity by the unit cost, it means that the opening balances will require 3 columns. So we will pick cell B1 up to cell D1 so that we merge the 3 cells together as one, and the label becomes opening balance. Then Below the opening balance, we shall have the quantity, the unit cost, and the amount, which represent the value for the stock item. Then in the next column, we shall take into records purchases of the item within a certain period. And these purchases, we shall only look at the quantity aspect. Then we will have the sales also, so that anytime we sell, where the entry will passing through the sales day book, the total quantity for the item sold is expected to appear in this column. Then finally, we shall also take 3 cells or 3 columns to record the closing balances. So we have the closing balance also here. And this closing balance also will require the quantity, the unit cost, and the amount. So this is how the inventory control sheet is designed. Right. Let me merge these 2 cells so that they will all be on the same line. Now, the next thing to do is to transfer the various items we have on our file sheet into this account. Now, when you go to the file sheet, you observe that the items are categorized into 3. We have stationery, we have drink, and we have provision. They are into separate columns. Fortunately, when you get to the price list table, over there, all these items which are into separate columns according to their category are put together into one column. So if you want them to also appear under one column, then it means that it will be better we pick them from where they are within one column, and that is from the price list table. Now, instead of us to copy, highlighting this, copying, and then going to paste them, which is not the best approach, we will rather use cell referencing approach so that in case we delete an item from this table, that item will automatically be deleted from the inventory account. The same way we can set it up in such a way that if we add a new item, then that new item could automatically appear within the inventory account. So to do this, we shall use the equal sign. So we put in the equal sign in cell A3. After this, we go on to the file sheet. And from the file sheet, under the price list table or within the price list table, we pick the first item, which is book. Having selected the item, we hit the enter key to accept it. And now you see that book as an item is appearing in the inventory account, and it is using the reference address equal to file L2. That means when you go to the file sheet in cell L2, that is where we have the book as an item. Now, having gotten the book appearing under description, we will then drag it so that the other items will also appear. So with this, let me drag up to, let's say, row 30 and see. So you realize that all the items we have on the file sheet appear here. We've given room for future items. So when you go to the file sheet and add any item after needle, that item is expected to appear in cell A17. Right. Now the next thing to do is that with the opening balances, at the start of the period, what you have to do is to do stock taking so that we know the quantity on hand for each item. Then you come and input it in this column B. Then the unit cost of the item will have to be entered in column C. So with these two values, the quantity and the unit cost, we can then calculate the amount or the value for the opening inventory. And this time, we will multiply the quantity which is in cell B3 by the unit cost which is in cell C3. So B3 multiplied by C3 is going to give us the amount or the value for the opening inventory. So I accept this. This being an amount, I will format it to accounting value by clicking on this comma style. So the 0 then turns to dash. After this, I'll drag it for the remaining items. Now, under purchases, we need the quantity of each of the items that we will purchase. And anytime we make a purchase, we record the quantity purchased within the purchase daybook. So we will link this particular column to the purchase daybook so that as and when we buy any of the items, we will get to know the total quantity purchased so far. So if we take a period of, say, 1 month, within that 1 month, anytime we buy, for instance, pen, the system will keep on adding up the quantity purchased so far. Now, in our purchase daybook, you will find out that we use this system to record not only purchases, but also purchase returns. So for instance, if you look at the entries we have here, and we consider an item like book, you'll find out that book has been purchased 2 times. We have one on the February 1st, and we have one on the June 4th. Beside these 2 purchases, we have also returned 20. So in effect, the quantity for purchase that we need here is expected to be the net one, which is after the returns has been taken out. So to be able to obtain the total quantity of the item purchased so far, we employ the SUMIF function. And as a SUMIF function, we require what you call the range, we require the criteria, and as well as the sum range. The criteria, this time, because we want to compute the total quantity purchased for, let's say, book, then book in this case becomes the criteria. And as we have book in cell A3, then it means that our criteria is going to be A3. But the range and the sum range all will come from the purchase daybook. And when it comes to the purchase daybook, the range is expected to be the column where we can see the various names of the items. And this is a column labeled as item. So the item column is going to serve as the range. The next one is the sum range. Because we are interested in adding the quantity of the item purchased, then the quantity column becomes the sum range. So in this situation, our range is the item column within the purchase daybook. Our criteria is A3 within the inventory sheet. And the sum range is the quantity column within the purchase table. You know, the purchase book, the table is labeled as purchases. If you want to confirm, as I go inside the table and I click on the design ribbon, you see the table name is called purchases. So meaning that we can still stay on the inventory control sheet and make the reference from the table. So I'll use the sum if function in this situation. So equal to sum if, bracket open, the range will come from the purchases table. So as I make an attempt to type purchases, the table name appears here. So I double click on that. Note that it is not the entire table serving as a range. We are going to use just a column from the table. So to be able to access the columns within the table, this is where we type the square bracket. And as we open the square bracket, all the columns within the table appear on the screen. The column we are using as a range is the item column. So either you type it or you double click on what you want to use. Then we close the square bracket. This ends the range. So after the range, we bring our comma. And the next item to define is the criteria. We want to find out the total quantity for, let's say, book that we purchased. As we have book recorded in cell A3 from this worksheet, then we can use the cell reference A3 as the criteria. After the criteria, we need another column, another comma, and after this comma, we define the sum range. The sum range is also from the purchases table. So I go for the table name purchases, then with my square bracket once again. And now the column I am interested in adding is the quantity column. So the quantity column becomes the sum range. I close the square bracket followed by the round bracket. So this is how we will be able to obtain the total quantity for book purchased from the purchase table. Now I accept this because I have some recordings in the purchase table. It is telling us that total quantity for book purchase so far is 230. Now when we are done, we will have to drag the formula for the remaining items. Now the next one is the sales. Sales is also going to be obtained from the sales table. So when you go to the sales table, at any time we sell, we will effect the entry inside the sales table. So like we did for the purchases, we are going to repeat the same concept to obtain the total sales made in terms of quantity for each item. So within the sales table, let's find out the name. When I go there, we see that this table has been labeled as sales. Therefore, we have to use the name to get the appropriate referencing. So the function sum if is also going to be used here. This time, the range is going to come from the sales table. So I pick the table name sales. I open my square bracket once again, and the item column will serve as the range. Then I close the square bracket, followed by the comma. The next is the criteria. The criteria is still going to be A3, comma, and the sum range from the sales table. So sales again, and this time I am interested in the quantity as my sum range. So we've gotten the function to obtain total quantity for each of the items that we sell. So we accept this formula and we drag it. Remember, when we calculated for the amount, we formatted it to accounting value. But as far as the purchase and sales are concerned, these are quantities and we don't need to format them to accounting value. So we leave them as zero as they are. We leave them as zero as they are. Now the next to do is to compute a closing balance. For the closing balance, we will need the closing balance for quantity, and then we need the value or the currency value for the closing balance. So for the quantity, our closing balance is going to be the opening balance, which we have in B3, plus the purchases we have in E3, minus the sales we have in F3. So closing balance is the opening balance plus purchases minus sales. So I accept this and then drag the formula. Right. Let me skip the unit cost and move on to the amount. I will get back to the unit cost. So here, the amount is also going to be the quantity, that is the closing quantity, multiplied by the unit cost for the closing balance. Closing quantity multiplied by the unit cost of the closing balance. Right, so after the function, we'll hit the enter key to save the formula. This is also an amount, and it requires us to format it to accounting value. So we click on this comma, then we drag it. Now, you see, though there is closing quantity, but because the unit cost is not yet defined, amount is zero because we are multiplying the quantity by zero, and that gives us zero. Now, what we are left to do is to look at how to value closing stock. So stock valuation concept is now coming. We've learned in cost accounting or management accounting that when it comes to stock valuation methods, we have what we call the first in, first out. We have the last in, first out, and we have the average method. In this particular situation, we are going to value the stock using the average method. You should note that this course, spreadsheet accounting, is doing away with programming. So we are not using VB, Visual Basic for Application, is not applied here. And as a result, the average method has been the possible way I have managed to value the closing stock. So we are going to learn about how to apply the average method in stock valuation. And from there, we will produce a formula that can satisfy our needs. So we shall go and learn about the stock valuation method using the average method. So the average method for stock valuation. Right. This is how the stock sheet looks like. We have receipt, we have issue, and we have balance. Under each, we have quantity, rate, and amount. Under issue, we have quantity, we have rate, and we have amount. The same way, under balance, let me set this to the landscape so that we can have it better. Right, so under balance as well, we have quantity, we have rate, and we have amount. Now, as an illustration, let's suppose we have closing opening quantity of 100 at rate of 10, giving us an amount of 1,000. Then on another occasion, we buy, let's say, 200 at 12. This will give us 2,004. So how do we value our closing stock in this situation? Using the average method. The average method requires that you add up the last closing balance to the current receipt. So you see the last closing balance is 100. We add to the current receipt of 200, and this will give us 300. Then we add the amount for the last balance, closing balance, closing balance, to the amount for the current receipt. So 1,000 plus 2,004, giving us 3,004. Then when we are done, we will divide the amount, which is 3,004, by 300. So 3,004 divided by 300 will give us 11.33. So it means that the closing stock of 300 is valued at 11.33. Another scenario, another situation, if we are to receive extra, say, 300 at 12.5. We receive 300 at 12.5, and this will give us an amount of 3,750. So we have 3,750. For the closing balance, you add the last closing balance of 300 to the next receipt of 300, giving us 600. Then we add up the amount for the last closing balance to the amount for the current receipt. So 3,750 plus 3,004, giving us 7,150. So we have 7,150. Now the closing, the unit cost for this 600 will be defined by dividing the 7,150 by 600. So 7,150 divided by 600 this time will give us 11.91. So it means that the unit cost is 11.91. Now at this stage, we will be able to deduce a formula, and the formula is going to be deduced based on how the values in this last entry were obtained. So our interest here is to define how this 11.91 is obtained. And we realize that in obtaining this 11.91, we first of all calculated this 7,150, then we calculated this 600, then the 7,150 being divided by the 600. So looking at all these entries, what will be the suitable formula to arrive at this 7,150? And that suitable formula is to say that opening amount, and where is the opening amount? The opening amount is the amount for the opening balance of 100, which is 1,000, plus the sum of purchase amount, meaning that when you take the opening amount of 1,000, then you sum up all the purchase amounts, and the sum that you obtain, you will add it to the opening amount. So if when you come here, these two represent purchase amount. So we will have to sum up the 2,004 to 3,750. So 24 plus 3,750 will give us 6,150. And then the 6,150, which is coming from these two purchases, added to the opening amount of 1,000, will give us this 7150. So we say that opening amount plus the sum of purchase amount. And this is what will give us the 7150. And to obtain this 11.91, we will divide this by a certain value. So to make it so simple, we will put these two inside a bracket. We put these two inside a bracket. Then we divide by something. What are we dividing by? How was this 600 also obtained? So we open another bracket here. To obtain the 600, we had the opening quantity plus the sum of purchase quantities. So the opening quantity, which is 100, plus the sum of purchase quantity. When you add up the receipt quantities, 200 to 300 will give us 500, plus this 100, which will going to give us the 600, right? So it means that this will be the formula to obtain the closing or the value for the closing stock. That is the unit cost for the closing stock. Now, when you go into the control account in our Excel sheet, you find out that some of these values are calculated there. Some of them are not there. For instance, you realize that when you come here, B3 will represent the opening quantity. D3 will represent the opening amount. E3 represent the sum of purchase quantities. So among the four items required, which are opening amount, sum of purchase amount, opening quantity, sum of purchase quantity, three of them can be obtained direct from the inventory control. And these three are the opening amount, which is in cell D3. We have the opening amount in cell D3. If you want to confirm, the opening amount is in cell D3. Here is it. Then we have we don't have the sum of purchase amount, right? That is not there. So that is going to be D3 plus sum of purchase amount, because the sum of purchase amount is not found within the inventory control. Then divided by, into bracket, the opening quantity is found in cell B3. So B3 is the opening quantity, while the sum of purchase quantity was identified in cell E3, right? So you see, B3 contains the opening quantity and E3 contains the sum of purchase quantity. So that means that in our formula, we can easily have opening quantity and the purchase quantities all from the control account. So this becomes the formula. Now, how do we get the sum of purchase amount? How the sum of purchase amount is similar to how the sum of purchase quantity was obtained. Going to the Excel sheet, you realize that the sum of purchase quantity was obtained using the SUMIF function. And because we are interested in obtaining total for quantity, the quantity column within the purchase table was taken as the sum range. So if you need the sum of purchase amount, then it means that the amount column within the purchase table is going to serve as the sum range. So in this case, getting our sum of purchase amount will require the SUMIF function. So we will need the SUMIF function to obtain the sum of purchase amount. So the formula now becomes D3 plus SUMIF, and this time The range will come from the purchase table. So the table name is called purchases. And the column that serves as a range becomes the item column. Then comma. Criteria still remains at A3, comma. And the sum range, again from the purchases table. And this time the column is the amount. So this will give us the sum of purchase amount. So far, 2 brackets have been opened. We have opened 2 brackets, so we need to end the 2 brackets before the division. And then we have the opening quantity plus the sum of purchase quantity coming here. Right. It is possible, in fact, this is the formula, but it is possible at the end we'll get divided by 0 error. And that will be a situation where the sum of purchase quantity and the opening quantity result 0. For instance, pencil has 0 for opening quantity and 0 for the sum of purchase quantity. So if you just keep the formula as we have shown here, at the end, the output is going to be divided by 0 error. So to avoid the divided by 0 error, we can therefore apply the if error function. And this will be the final stage of the formula. So applying the if error function, the function becomes equal to if error. You see, the if error has come with its own bracket. And the formula to give us the unit cost for closing balance also starts with another bracket. So it means we shall open another bracket here. Then our D3 plus sum if purchases table. The column serving as a range is the item column, comma, criteria is A3, comma, purchases table once again. And the column serving as the sum range is the amount. And there you see that 2 brackets came before dividing by B3 plus E3, then another bracket close. At this stage, you know, the if error function has only 2 syntax. The first is called value, and the second is called value if error. So whenever you are using the if error alongside a formula, the formula becomes the value. So this time we are using the if error function alongside a formula. So the whole of this formula here serves as the value. So after this, comma will come, and the value if error is a 0. Then we close the function. So this is going to be the formula we need to put in to calculate the unit cost for the closing balance for our inventory. So we are going to move into the Excel sheet to enter this formula and see how the system will calculate the unit cost for us. So going back to the Excel sheet, at the unit cost under the closing balance, we will have equal to if error, then another bracket open, the opening amount, which is in D3, plus the sum of purchase amount, which is derived by the sum if function from the purchase table, where we can get our range, and that is the item column, comma, the criteria is E3, comma, within the purchase table, where we can get our sum range as the amount, right. Then 2 brackets will come before we divide by the quantity side, which is B3 opening quantity plus the sum of purchase quantities, which is E3. We close this bracket, and this satisfies the value, comma, value if error, 0, and then bracket. So in the Excel worksheet, this is how the formula is going to be. After typing, we accept the formula. You see, we have gotten this, and we need to format it to currency format. Currency format to give us 2 decimal places. So we click on this comma style, and we have the 2 decimal places. We drag the formula. So this is how the inventory control account is prepared. So at this stage, when you start recording entries into your sales and your purchases playbook, or after every recording, you'll be able to check the closing balance for your stock item. Now see that we have some recordings on the, what do you call it? So we have some recordings in the purchase book. We are going to also do record some opening quantity balances, and we record some sales. Then we shall see how the inventory account will behave. Now let's suppose that we have these opening balances for the various items. We have these balances. Then their values recorded here. The unit cost column needs to be formatted to give us accounting value. Okay. Right, so we have recorded some opening balances for these items. Now, let's go and make some sales and see. So let's suppose that today being the June 7th, so we are making some sales today. So I have my month day here as the date format. So 6/7/20. I'm making some sales to any of the customers here. I pick my sales account. Let me say I'm selling some stationery. So I have my, let's say, book, and I want to sell, let's say, 100 quantities. And the tax I am charging is the standard tax. Okay. On the same day, to the same customer, another stationery item, this time pen I'm selling, let's say 15 at the same standard cost, standard tax. Okay. On the next day, okay, on the next day, which is on the 8th, I sell to another customer. This time I want to sell some drink items. Coca-Cola, I'm selling, let's say 10 at the standard tax. Okay, good. Now, when you go to the inventory control, you'll see that those items or those sales that I made, they are reflecting here. Okay, I made these sales. Initially, Coca-Cola had opening balance of 80, no purchase had been made. We have sold 10, and there is outstanding balance of 70, right? It is using the same unit cost as the opening balance because no purchase had been made. Now, if I should go and record the purchase of Coca-Cola at a different cost, then you see that the closing balance will have a different unit cost from the opening balance. Let us test that and see. So going to the purchase day book, let's say on the 8th of June, so 6/8/20, I made some purchases from a supplier, and now I want to purchase, let's say, Coca-Cola. I'm purchasing 55 at a cost of, let's say, 57. The supplier also charges the standard cost. Now let's see from the inventory sheet. This time, you'll see that because we have purchased 55 at a different unit cost, the unit cost for the closing balance is no more the same as that of the opening balance. So this tells us that the formula that we used is working. Okay, the formula is working. So this is how the inventory control account is prepared. Now, before I end this, I would like to go back to the sales sheet to explain something to you. Now you see that the selling price has been set up here. Within the period, you are likely to change prices. And when this decision is made, the new price will have to be set up in your sales book so that subsequent sales will apply the new prices. Now let's assume that we want to increase all prices by 10%. So that new price will have to be set up. And as soon as we set up the new price, it will require us to effect the update in the sales table. So let's go to the file sheet to set up the new price. So I'll put into column N, let's say new price. And we say that the price is going to be increased by 10%. So that will be 1.1 multiplied by the old price in M2. So 1.1 multiplied by M2 will give us a 10% increase in price for all items. Now, the price list table, initially it was 2 columns, but now the new price has been added up, making it 3 columns. So because the old price is no more going to be effective, we cannot delete it, because if you delete it, it will have effect on the recordings we have already made in the sales book. So what we can do is to hide the column so that when you come into the price list, you only see one price. Okay. Now, how do we effect this update in our sales book? Let me create a new line where the update can be set. You see, we are working in a table, and in a table, any row you make update to a formula, it goes to affect all rows within the table. So this means that if we update the formula as we have it on row 11, that new formula we are going to enter here is going to replace the old ones we have from rows 8 up to row 10. You see, when we were typing this formula, we made use of the column index number as 2 because the old price was in the second column. Now, our new price is appearing within the third column. So it means that our column index number is no more going to be 2, but this time 3. So if I come here, let's see, if I change this 2 to 3, you see, before I accept the formula, you check the selling price for book, it is 2.5. That of pen is 13. That of Coca-Cola is 65. Now, the moment I hit the enter key, you see that it has affected the old entries. You get it? It shouldn't be this because the old entries have already been made, and they have been made at the old prices, and for that matter, they should remain in the books at the old prices. So, you know, as I have said earlier on, we are not using VB, Visual Basic Application. So this is the best approach we can use to effect the update. To be able to do this, you will have to convert the table into a normal range. You effect the change or the update, and when you are done, you create a table for it once again. You know, table working in a table makes you more efficient because you will not have to drag formulas, and the system will be extending the rows for you as you go. So now we are going to see how we can convert the table into a normal range. To do that, you go inside the table as I'm there, then we click on the design ribbon. From the design ribbon, you see at the tools column, we have convert to range. So we click on the convert to range, and it is going to ask you, do you want to convert the table to a normal range? You say yes. This time, this is no more serving as a table. So I can update the formula on row 11. So I double click here. It is giving me the column index number 2, representing the old price. Now that I have changed the price, which is in the third column, I'll delete the 2 and put in 3. And when I finish, I'll hit the enter key. So this time you see that the old entries still remain, but subsequent entries are going to use the new prices. Now, as soon as I finish with the update, I'll recreate my table once again. So Control T and click OK. Then we remember the table name will have to be redefined, which is sales. Okay. Now, the only thing we will have to do is that at this stage, the rate formula will no more be copied to the next row for you. So you will have to manually drag it. But all other formulas, that is the amount, the VAT, the health insurance, and the total, because we have not tempered with those formulas, the system will copy them for us. So at least we have only one formula to be copying. The rest, the system will copy for us. So for instance, if I am to sell some book, let us see the price I'm going to get. So on the 9th of June, so 6/9/20, I am selling some items to, let's say this time, let me sell for cash, right? I want to sell some items for cash. So you see, if you want to sell some items for cash, it means you have to go and create account for cash sales. And this account for cash sales will have to be entered under the customer column within the file sheet. So I'll type here cash sales, so that all sales for cash, you will select that account. Now let me go back to the sales sheet. I want to make some cash sales, so I've selected my cash sales and I pick my sales account here. I want to sell book, which falls under stationery, and then I pick my book. Let's see the price that is going to come. You see, this has given us the new price, okay? I'm selling, let's say, 20 quantities and at my standard tax. Now, if I go on to the next line to effect another sales, let's say on the same day, if I'm to make another cash sales of, let's say, pen, which is also a stationery. If I pick pen, now let's say the quantity I'm selling is 30. What do you see? You see that the price didn't appear. So this is where you manually copy. So you just pick this and drag. Okay, you pick and drag and you get it. Right, so that is the only work you'll be doing whenever you change the price. It means that the rate formula, you have to be dragging, okay? But all other formulas will still keep working. Now, we have made some cash sales. And I said that cash sales is not supposed to be part of, okay. it didn't work here. Let me find out why. Okay, because we were supposed to have the cash sales appearing in this column. Okay, you see, I'm beginning to realize that when we change the table and converted it back to a table, we converted it from a table to a normal range, and now back to table once again. So that has even had an effect within the customer's account. It is also likely that it is going to have effect within the inventory account. Now let us see the effect that it is giving us. You see, initially when we're using the SUMIF function, we made use of a table name, right, and a column. But because we converted it to a normal range, the system also has converted the formula to a normal range formula. So it means if you change the price, you have a lot of work to do. That means you will have to come and set up every formula you have linked to the table before converting to the normal range. You see, so here, I'll have to retype the SUMIF function once again. So the SUMIF function, I'll pick my sales table, and the column is the customer column, okay? The customer column, the criteria being A2, and the sales column again. And this is the total, right? This was how the sales column was done. Now I will have to drag this formula, and this has given me the correct output. Okay, so it also tells us that from the inventory, the sales column, you see, that has also converted to a normal range. So we will have to redefine this formula once again. Okay, so we'll have to redefine this formula once again. And this will be from the sales table. This for item. So the range is the item, right? Comma, A3, comma. And then within the sales table again, this time we need a quantity, okay? So this was the formula. And when you do it, you will have to drag it once again so that you get the correct output. Okay, now these are the effects or the changes we have to make. Now, you see that we have made cash sales of 568.7. So this 568.7 cash sales we have made is not supposed to be part of the closing balance for our accounts receivable or our total debtors. So what we need to do is that we will have to pass this into the receipt side of our cash book. So 568.7 will have to go into the receipt side of the cash book. What was the date for the sales? The date was on the 9th of June. So when you go to the receipt side of the cash book, you put in June 9, 20. And this time is a cash sales which had been created under customer's account. We select the CS, and then we pick the cash sales account. We look for the value or the outstanding balance. The outstanding balance for the cash sales from the customer's account is 568.7. So this 568.7 will have to be here. Supposing we receive it in cash, then we pick our cash account. So when you go to the customer's account, you will see that the cash sales is not supposed to have a closing balance, and that has been reflected here. This same thing applies to suppliers. Anytime you buy with cash, immediately you have to pass the entry into the payment side of the cash book so that at the end, you will not have any balance for cash purchases. Okay, so this is the end for today's lecture. The key things you should look out for is that One, when you change the price, you'll have to convert the table to a normal range. Before that, you create a new row where you'll be updating the formula. After creating the new row, you will have to convert it to a normal range. You effect the change or the update of the formula there, and then quickly you create a new table, or you create a table for it again. You name it as the sales. And then you should note that because you converted the table to a normal range, it will have effect on the customer's control account at the sales column, because within the sales column, we made reference from the sales table. So having converted it to a normal range, that reference will disappear. And for that, you will have to reset the formula under the sales column. And the same thing applies to the inventory column. Under the sales quantity column, you have to reset the formula by using the table name. These are what you should be doing anytime there is a change in price. Thank you for today.